people becoming clients at the tail end of the 2 years?
Great question. My convincing power was better. I was better at convincing people, and I was better at convincing people because I understood why they needed it more than just being transaction.
Welcome, guys, to another episode of Consciously Curious, where we deep dive with those that are thriving in their passion. In today's episode, we're going to deep dive into financial advising, what we should do with our money when we're ready to retire. Eric, welcome to the show.
Thanks for having me. Appreciate it.
It's been a minute. Thanks. Like a few weeks ago, you reached out, about maybe some potential collaboration that we could have done. And then what came out of it? You're now helping me with my retirement funds. And then here we are recording an episode because I'm trying to learn more about the industry. So thanks for sharing your time with us. As a financial advisor, how long, and we can leave the company out of it, but like how long have you been doing this kind of work?
About a little over 6 years now.
6 years,
Yeah,
okay.
Going on 7.
Okay. And I knew you all the way back in high school. Back in that day, and even at UIC and in college, what did you think your trajectory was of your life, of your career path?
And what do you mean by that? In terms
What did you think you'd be doing for work back in high school or even back in college?
Great question. So I thought I was going to go into retail.
Okay.
Right after college. It's all I knew. My parents were in retail. They owned a retail store, and that's really much all I did. So I did actually go into retail right out of college. That's what I went into. I did a little bit of Sherwin-Williams, the paint company.
Okay.
So I did that. I did some selling jewelry. Like Michael Hill is a company that used to be around. It's K Jewelers and Rogers and Holland. It's the middle class kind of jewelry. It's not your Tiffany upper jewelry. So I did that for a couple years, and then that's when I went into the financial services as a financial advisor. So, yeah.
What was your introduction to financial services?
Great question. So I'm what they call a warm recruit, meaning there's people in our business that are recruiters, meaning they always are continuously looking for new people to hire, and people who are producers. There's really two kinds, right? And producers are looking for clients. You're my client now. So a warm recruit means that I didn't apply. So I knew someone through someone else, and it was actually my wife's friend's husband. My wife's friend's husband was buying jewelry from my store, and he's a young guy in his mid or low 30s at the time, buying a 1.5 carat ring, which is a very expensive ring for anyone. And he was driving a nice BMW M5, very expensive car at a young age. So I asked him what he did. He said he's an advisor with New York Life, and at the time I was in retail making $50,000, which is actually really good money for a 23, 24-year-old. That was about $700 a week. My wife was doing well too. She's a nurse. But I wanted to make that 6 figures like everyone else did. And I knew at retail it would be very difficult because, you got to be in a regional manager, kind of not a store manager, but a regional manager.
To eventually make that money that you were hoping to make.
Right. So I approached him, and it seemed like a good industry to get into. Wolf of Wall Street, and everything's related with money in movies. So that's how I got into it, through the introduction of meeting him.
What was your relationship with money? What could money do for you at that time?
Yeah. So, you mean lifestyle?
Like what were you hoping it could accomplish for you? Like, there's different reasons to seek money, and so at that time, what were you hoping for money to bring for you?
You know what? At 24 years old, right? I think money for me at that age was just, I didn't really have much. It's just an ego booster, right? I'm 24. I'm immature. Especially in the world we live in today with social media, we're all comparing ourselves with who's better, who went to the better college.
And I'm not shaming materialism. I'm not shaming, like, I like fancy things too. But it's the reasons why we do it, right? Are you doing it for yourself, or are you doing it because you want to show off?
Yeah, initially it was actually I wouldn't say marriage, but my egotistical male side. So my wife and I, we got married at 23, 24, and she made more money than I did, right? Which was fine because she's a nurse. Nurses make really good money. And at the time, I think nurses make 60 something in the beginning, and I was making 50, which we were totally comfortable. But early in our marriage, we had a lot of arguments, and like most marriages, it was about money. It was a lot about money, and I thought that if I made enough money, this money conversation would go away. This arguments about
What
money.
what were you guys between that conversation? This is like an extra layer deep.
Yeah, yeah.
What were you guys hoping that money could bring for you guys?
Just comfortability, not worrying to have to pay bills.
Mm.
At the time, it wasn't. We were comfortable with bills, but I guess it's a much accelerated pace. At the time we were living at a 800 square feet, maybe 700 square feet house renting. I think it was $800 a month or something.
Mm.
We're 23, 24. Let's start having kids. Let's get a house. Kids are expensive, is what we're told, right? So we wanted to start that life, and 100 and some thousand combined income. We were saving a few thousand a month, which was good, but we wanted a much accelerated pace,
Mm.
especially after. It's just we wanted that lifestyle.
Sure, sure, sure.
Yeah.
Sure.
So that's
And so from this friend of a friend, was it only the financial aspect that appealed to you, or did he tell you anything about the job that also stood out?
great question. Yeah. So I was always interested in investments and how they worked. Initially, I didn't know. So I remember getting books. I never read. I'm a poor reader, right? At that time, I don't think I ever finished a book in my life. And I buy these investment books, never finish it. And I was always curious about it. And here was the opportunity to pick his brain. So before I actually joined, I actually picked his brain. Like, what's an annuity? What's a mutual fund? How does an IRA even work?
Mm-hmm.
And I would pick his brain. He gave me some content, I guess, free content, and teaching me here and there. And that's when I'm like, I got to get in this investment game, this finance game. I want to learn. It was my own curiosity. I just didn't know where to start, right, or where to research. So I thought if I make a career out of it, I'll learn there. They'll train me, right? So
Mhm.
that's kind of how that started. The money aspect was a big part of it as well. Like that 30-some-year-old making that kind of money, I want to make that, and I can't do it in retail unless I'm 40 or 50. So I'm sure there's people in their 30s doing it, but majority of them are in their 40s or up. So that's the two reasons. Yeah.
Okay. And at the beginning, like they provided all the training and all that. Did it seem too good to be true at all? Like, what was the model? Where was the money coming from if they're providing all the training for you? What were they asking of you?
The company,
Yeah.
uh, in terms of the role itself.
Yeah.
So when
When you're first starting, yeah.
yeah, when you're first starting, the training is not enough, right? I mean, there's so much to learn in this business that in the first year, it's just you're not going to be an expert in, just like anything.
Mm-hmm.
And that is really, really the tough part. The retention of this business that is not spoken of in the career that many people I know for the interview where people are trying to get into this business. When we go interview, when they first initially interview, they're sold a dream. There's 2, 3, 4, 5 interviews. They're sold a dream. Some people show the checks. I remember when I
Wow.
interviewed, there was a guy that showed his check. It was 50,000 every 2 weeks net, and that's what got me sold. I was like, wow, if he could do it, I could do it. And but the reality is the first year and the first 2 years is very, very tough. And yes, you got to call your warm market is what they call it. Call your friends and family. That's probably the hardest part to do, to really stomach. But to answer your question of what's expected of you, it's probably call your warm market,
Mm.
which throws off a lot of people, right? I don't want to call my market.
Yeah, I've never been able to been able to have this candid conversation and hear it from your perspective, like off camera before this. Like I told you, like I've been approached, and I'm sure other people have been approached by their friends or family members that just got into this business, and they're reaching out to their warm market, and it just comes off as salesy or pushy. And how did you what were the feelings or things that you were wrestling with at that time? Did it feel right to you at that time?
Uh, it did for me. I'm a very aggressive personality where I don't mind the shame.
Mhm.
But I did feel shameful a little bit and salesy. I did feel that, and a lot of people tend to. It's needed though.
Although you came from a retail industry.
Right, because
Yeah.
if I'm calling someone, everyone rather call someone you don't know, because there's no hurt feelings. He could say "f you" and who
Right,
cares?
right. But these are people you know.
Right. So there is that emotional connection. What happens if we lose in a bad connection? Right. So I did feel that a little bit, and I'm sorry. What was your question?
Well, it's just like what other feelings were you wrestling with when approaching your warm market, your friends and family, and I think if not to put words in your mouth, but it's like, did these people even need these services?
Great question. So at the time, you're just drinking the Kool-Aid of the company
Okay.
that they brainwash you. But later on, as you learn the strategies, you actually realize, yes, they do, right? And you really have to believe in what you sell to get to that point. But that doesn't happen after maybe, I'd say at least 2.5 or 3 years in, because you don't, then the knowledge starts soaking in like, oh, wow, this is how it works. This makes sense. But then it's transactional, right? So you're just drinking the Kool-Aid thinking they need it, but not the reality of why they need it. So they do need it by all means, but the why isn't quite there yet of why they need it. So it is very transactional. The hardships that I've been into, to answer your question, is a lot of rejection and afraidness of calling people, and a lot of people reduce the amount. So I've done 300 interviews a year, right, to hire people, and I've hired many people before. And if anyone's looking to this career, the number one reason why you're going to fail is your inability to call your warm market, and you're going to get rejected. It's going to hurt, and it's going to snap. For example, if I call Vic, and I just started my career, and I say, Vic, let's meet. I'd love to have a meeting with you and help you with your financial planning.
Right.
And you say, follow up with me. Not now, but can you call me next week? Sure, yeah. And I call you next week, they don't pick up. And most of them are no pickups. Well, the question is when do I follow up with Vic again to make sure that the relationship still is good? It's if I follow up with him too often that he's going to think I'm bugging him, and now it's a salesy relationship, not a personal, high school back, like our personal relationship's going to get ruined. So what's that fine medium? And you got to throw that away. You have to, right? So but that was very difficult for me, and as it is for most others. And you kind of give up on that. You follow up with Vic 1, 2, 3 times, and then you say, you know what, I'm not going to call him again. He's going to hate me for it. And you go on to the next person. So my hardship was following up. When is the right time to follow up with them? And many new guys ask me that. Like, everyone goes through it. But that was such a hard thing to do. And continuously, still, even with that rejection, with many Vics that I have to follow up with and afraid of losing the relationship, should I still call that new Vic, that person I haven't called yet in my warm market? Should I still continue this cycle? And that's very, very, very difficult for most people.
Yeah. In addition to that, do you teach your new recruits like different, it feels so manipulative, but like different angles to be genuine?
Great question.
To identify a need?
Yeah, so how I train people, yes, you do. But before you train that, the way I do it is I sell that person that I'm training first. So if they say, I have a friend named Vic that I want to help, I say, okay, tell me more about Vic. And then they'll tell me up to what they know. Not everything. They don't know that much of their financial information, but the basics, like age, is he married? Do you know if they have kids on Facebook? And then I'll give them some directions on, okay, when it comes to financial planning, here's the things that they can do. So I would sell the person who's making the call first to say, oh, okay, that makes sense. So that's number one. So because that relates to the call of their tone and the genuine tone of wanting to help than just, I want to sell you a product, right? And so forth. So I sell to the person who's calling first of the why and how they could help them.
Because they have to believe in it first, right?
Absolutely.
Yeah.
Yeah. So that helps. And then I go into the angles, so forth, of, hey, how, and the angles, by the way, I don't do too much of that. Angles, I'm assuming what you mean by that is overcoming objections.
Yeah, or to come at it from a more authentic, genuine perspective rather than seeking a transaction.
Good question. So the way I teach my guys is don't be too conversational. So a lot of the new people, including myself, when we start calling our warm market. We talk 15, 20, maybe even 30 or 45 minutes. I remember doing that in the past, like 45 an hour conversation of non-business, just catching up, haven't seen you in years. And then here's my pitch.
Were you taught that?
I wasn't taught that. It's just the nature of humans. We're afraid to talk about the business side. So we naturally keep conversing about personal relation, catching up. And then we're like, hey, I got to pull this trigger at some point in the conversation. Let's do it now. And an hour has passed. And it happens to everyone, including myself. And that doesn't help, though, right? That doesn't help as much. Number one, it's a lot of time, right, in this business. And number two, it's actually better to be upfront about it because it shows a lot more confidence to say, oh, wow, this guy gave me what he's doing, why he's calling. And it's a little bit more confidence booster for the person receiving the call saying, oh, you're pretty direct. And people want that. In the sales industry of any sales, people rather have direct than the car salesman that
they can probably feel it,
and they'll feel it, right? And that's another thing that people go through. Like, as humans, we tend to go through this around the bush method, right? Like the 45-minute and then the thing, and that actually hurts the relationship even worse, right? Than being direct. So You got to get out of your comfort zone and just be direct. 5 minutes, maybe 10 at most, and then just hey, tell them why you're calling. Tell them why you're calling, and there's
Yeah.
you'll be amazed how many people are willing to hear you out.
Can you elaborate on the model? So like why, and as a recruiter, right? Like why do you get any commissions from this? It's like why to have people in your team under you?
Yeah, yeah, great question. So there's a certain percentage industry wide, right? And it's pretty high. So, for example, if I hire Vic, okay, if I hire Vic and he does 100,000 in commissions, right? And that's not uncommon, by the way. Six figures is a very common thing in the financial services industry. And so if Vic made 100,000, my income for hiring Vic is 30%. So I made $30,000 based on the company. That's typically in this 20, 30%. Some places a little bit more,
Wow.
but that's a lot, and that's not out of Vic's paycheck, by the way. So Vic already made 100,000. I get, let's call it 30%. I get $30,000 on that, right, as an override. So there is some portion.
I guess some can look at that as like more of a pyramid, but
They do.
others can look at it as an incentive for putting in the effort for training, right?
Yeah, yeah, they do. And most people see it as the first, which is the pyramid.
Okay.
And that's very, very, in some ways it's true. But the reality of my definition of pyramid is this. In a pyramid model, primarily the income comes from recruiting.
Okay.
So if I'm hiring Vic, whether he sells or gets new clients, I could care less because the more he hires, the better it is for me as well. So we're just on a hiring process. In this process, your job is not to hire people if I hire you. Your job is to get clients, help them, serve them, and create a plan for them. So a little bit different, right? But in a typical pyramid scheme, as they call it, it's primarily recruiting is the biggest aspect. And there are financial services companies in our industry that is primarily recruiting related than helping clients. So the way I would say it is, it's not primarily pyramid.
That's a good way to look at it.
Yeah, yeah, yeah.
Damn. What's been over the 6 years? What was the tipping point to your success?
I would say 2016. I forgot when I got the
Okay.
so 2016.
So it took about 2 years.
Yeah, 2 years. Took about 2 years. It was my first six figures in the career.
Okay.
And it was primarily, it wasn't as hard as I thought. But I think the first 100. I think anyone would agree with this. If anyone I'm assuming at least in our industry, the moment you hit 100,000, after that it tends to get a little bit easier. But the first 100,000 is very, very difficult. I think it's just a mental block thing.
Why? Okay. Why? Like you come from more of a sense of like a place of abundance rather than scarcity. Once you hit that line,
I think that's what it is. Yeah, I think that's what it is. You have yes, that's
or
probably
or is
big
it is
one.
it easier to recruit once you're making those numbers?
I would know it's that's too, but primarily it's the first one, the abundance.
one.
Like, oh wow, I did 100,000, and it wasn't as like I wasn't working 80 hours, right? I was 40 or less, maybe
Yeah.
even sometimes 30, and
Yeah.
and I made 100,000. So it is that abundance. Well, if I put more hours, if I get better at this or that, I could probably make more. So it is that abundance mindset. But yeah, I think that the tipping point was just a little more work ethic was definitely involved.
Okay.
Yeah.
Okay. But like I guess why work ethic, but like why were people becoming clients at the tail end of the 2 years?
Great question. My convincing power was better. I was better at convincing people, and I was better at convincing people because I understood why they needed it more than just being transactional. So yeah.
Interesting. So what does that mean? You spent more time being conversational about what their needs are, or how did that go out?
I learned more on how each product worked, but not just the features and benefits of an actual product, but how it benefit their current situation and why they should get it. So, for example, if I could use an example
Yeah, please.
with the water, a transaction would be, I want to sell you. Okay, I'm gonna use coffee because I just finished it. But I'm gonna say the features and benefits of a coffee would be caffeine, keeps you awake. That's selling coffee as a product. Why it would benefit you is, I'm totally making this up, but let's say, I don't know. Let's say this just came. Your sexual drive is down, or I don't know why that came to my mind. I hope that's appropriate to your podcast, or those male enhancement pills or whatever.
Sure,
and
sure.
I learned about this, and I'm like, hey, if this coffee will increase your sexual hormones, whatever they're called for the male and female, libido or whatever it is, and so that's the real reason of why you should get the coffee, right? So I'm gonna sell you the coffee primarily on your ability to have a higher sex drive, and then I'll go into the caffeine and how it works. But I learned that, and obviously not everyone has a sex drive problem, but in my business, I learned that a certain demographic, 90% of them had this problem, right? And that's
Is what the lack of understanding of the products and services you provide
of what they needed. A lot of
of
times
what
they
they
don't
needed.
know what they need, and that's sales in general. And anyone in sales, our job is to sell our products and services to people who are looking for them, but most of them aren't. Right? Most of them are busy living their daily lives. So as salespeople, our job is number one to believe in it and what we do, but number two, selling them our product and service by educating them that they need this and why they need it, and then the features and benefits. Right? Kind of the reverse order in some ways. Um, and most of the people in salespeople will agree to this, is most people you sell to will not know that they need your products and services. Most people won't. Like for example, okay, let's just use total insurance, right? And then we'll go into investments if you want, but let's say insurance. A 60-year-old may have some sort of life insurance policy because when you're 60, you're like, okay, I got to start thinking about life insurance because I'm gonna, maybe pass over 70. So what kind of life insurance should I be looking into? And not everyone's really looking into that right now. They're occupied on other things: grandparents, retirement. So when you approach them, educating them why they're looking for life insurance. So before I sell a particular life insurance policy, here's the benefits and features of it. Hey, have you thought about leaving something behind? Oh yeah, I have. I'm 60, of course, 70. Okay, have you looked into it? No, not yet. So then I attack that because I know most of them are thinking that, and then I say, why? What are you looking to leave behind? I want to leave behind X, Y, and Z for my grandkids and my kids, whatever. Okay, great. So then here's the features and benefits of this particular product. Here's what I recommend to fill that void. So I understood a much more deeper connection on the emotional side for 60-year-olds and 30-year-olds, 20-year-olds and 40-year-olds, and that's what drove the more convincing power.
So yeah, and then I guess with the younger demographic, it's more of an investment than life insurance
That's
thing.
correct. Yeah,
Okay,
yeah, yeah,
interesting.
yeah.
Did that then you didn't realize that off the bat?
No, I didn't. I
That's
like.
okay. I mean, just yeah, we all start somewhere, right?
Yeah, yeah.
And is that what's been the cause of? Is there a high turnover rate with advisors, like when they first start out,
Significantly,
right? And
significantly.
why is that? Is it because they can't take the rejection or they can't do the warm? But like, what is the flip that you can switch that you can flip for them? Unless these people weren't even cut out for it.
So there's a theory in our industry where about 20% of the people that get into the industry, no matter how great the leader is that hired you and coached you through the way,
Oh,
and that's very important, but 20% of them, no matter what, aren't going to make it. It's just part of our industry, right? I could hold this person's hand, show them the way, spend hours of my day coaching this guy. It's just they're not fit for it. The other remaining 80% of the people, um, you got a shot depending on the leader. Leadership is very important,
mm,
right? So how good is the leader? Very, very important. How good is the coaching? Emotional support, very important,
mm-hmm.
right? So I think based on the leader, but the average. I'm sorry, I forgot what question was I answering again.
It's just like is there a switch that they can flip to lower the turnover rate to stop them from giving up, I guess,
For the producers or the recruiters?
for the producers,
The
the
producers,
new producers,
the new
right?
producers. Yeah, a couple of things. Number one, if you're thinking about the business, you got to do your warm market. First advice, you know more than you think. So the biggest objection is I don't know that many people. Within a month, I'll be out of names, and that's not true. And the reason I say that is go on your Facebook, for example, go on your phone, and if you open your phone contacts, you'll see people that you haven't thought about like right away, right? And this could be people who you're super tight with, like you hang out every weekend or every month, and you're really really close with them, your core friends. It could be people you haven't kept in touch in 10 years,
Mm-hmm.
but you still had a connection. And that connection is so critically important. Even if you hung out with them one time in college, partied and got drunk together, but you became Facebook friends after that, and you never talked after that one time of hanging out,
Mm-hmm.
that's still a connection, right? They'll remember you for those
Mm-hmm.
fun times. And And that's a huge potential of getting a yes to a meeting. So you know so many people. So don't say you don't have enough, right?
Okay.
That's number one. And number two, don't be afraid. If in the beginning, if you're scared, don't stab him right. Like don't follow up with him if you don't feel that, right? If you're scared of following, like I don't want to lose
They'll
Vic as a
sense
friend,
that.
they'll sense that. So don't call him again if you're feeling that until you have more knowledge. Again, 2-3 years. Once you finally are convinced you're helping them, which may take some time, don't call him.
But they can't avoid calling people for the first 2 years either.
Right. So initiate the call. You
Right,
have to.
right,
There's
you
no
have
way
to.
around it. You have to
Okay.
initiate the call. And at the same time, while you're doing your warm markets, do something cold, like LinkedIn. For me, it was networking pre-COVID, right? So I went to a lot of networking events,
Mm-hmm.
to find prospects that I never met before, to get some cold sources, and then get them as a client.
Are these other advisors or clients?
My networking events,
Yeah.
they're meetups, so they're not advisors, they're not clients, they're just random people.
What attracts them to the meetup?
Great question. There's casual people just want to hang out, new to the city, maybe they're new to the city, meet some new
Oh.
friends.
So this is completely unrelated to financial services.
Completely, yeah.
That's crazy because like you're kind of like a shark in a way,
Oh yeah,
right?
yeah.
And like, man, like I wrestle with that. It's like, what's my true intentions here? Am I here to get someone on the podcast or am I here to make a friend? Like same like could be with you. It's like, am I here to get a client or am I here to make a friend? Like I wrestle with where I'm coming from, what my true intentions are all the time.
Yeah, and look, you're right. It's to get a client. It is. It's to get a client, and you know people are going to struggle with that, and so did I, right? But you got to get over that fact. In anything, I think in anything,
Okay.
doesn't have to be sales. I don't know. I'm not super rich, but I think from meeting other people that are doing better than me and they're more successful, especially if you're money driven and you're very success driven, you've got to have an end goal of what your reasons there and get to the cut to the chase and just do it.
Here's another thing that might bring validity to what you guys do is how many advisors buy their own product?
Oh, more than 50% for sure.
Why? What? That kind of seems low to me.
It is. It is. And here's mine. I didn't. So this is my vulnerability to the podcast. I sold my stuff, whatever plans and strategies I did. I sold it initially, but I never bought it in the first couple years. And what changed was I would go secret shopping to other advisors from the other firms and just pick their brains to see what they did. And when I found out I had a different angle to it, and I said, okay, so what I actually have in knowledge is actually pretty good compared to the other guys. That's when I bought into it and actually started investing my way. But it wasn't until I compared my knowledge with other people
That's
that I started
interesting.
that. So
It's very ninja-like of you.
in terms of the secret shopping,
Yeah.
yeah, yeah,
Doing your own research,
yeah,
your market research.
yeah.
So, and do you think that was within the 2 years?
That was within the 2 years.
That was
Yeah,
within the 2 years? That's
yeah,
interesting. So, like, that was when you kind of like believed in the product that you were actually selling.
that's correct. Yeah, yeah.
That's huge. I mean, I think it like when I heard, I didn't even like think of it consciously, but like when I heard you say like, "Oh, these are what my numbers are," and like in my own retirement funds, and I'm like, "Oh, he has his own. He buys it. He has it. He bought into it," and I'm like, That's cool.
Yeah,
It makes it genuine."
yeah, it is. It is. Yeah. So and again, to be frank, it didn't happen the first couple years, right? I
Yeah.
was selling the same stuff, same knowledge.
Yeah.
But that's kind of what did it, right? My income, my first 6 figures was because I believed in it, and I was just more convincing. I had more. I wouldn't say convincing, but conviction.
Yeah.
I had more
Yeah.
conviction power because of I know what the marketplace is going to offer you. I know what your 60-year, like if you're 30, I know what your 60-year-old self looks like because I've met other 67-year-olds
Right.
that were 30 in your shoes. I don't assume a 30-year-old making the average 50, 60, 70,000 is going to be making $500,000.
Right.
There are some outliers, but in an average standpoint, I know what a 30-year-old is going to look like at 60 because of
Yeah.
the small data that I had. So because of that, I know, hey, I know what you're going to be in 60, so I could give you a much better leg up when you're 60, and that was the confidence. I met other 60-year-olds that were in your shoes in 30, and I knew what plans were available for the 60-year-old out there, and I'm like, okay, so I got an in. Conviction power from there.
Who's easier to obtain a client for, the 60-year-olds or the 30-year-olds?
You know what? Very, very, very slight variance. Slight variance.
Variance.
Slight variance.
So it's just same.
Very similar. Yeah.
How many 6-year-olds don't have a plan already?
Great question. Majority of them.
What?
Yeah, majority of them. There's a funny sign. I was driving on a highway. This is I share the story a lot. So if I'm driving, those billboards that we were talking about. There's a billboard and on the highways, and it read most people prepare and plan for their weekend vacation, a couple hours, then they do their retirement plans, and it's so true. I would say statistically, if I'm at 10 60-year-olds, maybe one or two has a plan somewhat, and it's not even fully done yet. So
Like they probably haven't looked at it in a while. It's probably from their job or employer, and
yeah, that or there's some missing pieces that they like. Then they never had.
there's
They
so
never
much
knew.
potential.
Right. Yeah.
Interesting.
Yeah.
Okay, that's good to know. It's good to know.
Yeah.
I wanted to reel it back to, from the recruiter's perspective, how early on can you tell when someone isn't cut out for it?
Uh, you could tell for someone who's for sure. Yeah.
Hmm.
Yeah. You could tell.
And do you now, like coming 6 years into it, do you take the initiative to kind of provide an ultimatum or like be upfront with them and be candid? Like, is this like how do you feel about this? Like you approach them and ask them like, what's going on? Like,
Every recruiter's different. The way I do it is, yeah, I'm very upfront. I'm very, very upfront. And I say, here's why I don't think you're going to be able to do it. I think one of the biggest difficulties is calling a warm market. I just don't think you have the trigger
Sure.
trigger feeling to say, hey, let's do it. Based on, and a lot of times it's maybe timidness, right? Like they're
Oh
very
yeah.
timid. That's very, very difficult. But there's very timid people that do break the point. So I could be wrong. I know the friend of mine that started the business. He was super, super timid. Did really, really well though, right? So you just don't know. But that doesn't mean for the listeners here. That doesn't mean timidness means you're not going to do well. It just means that you got to break through more points to be willing to talk to people,
Yeah.
especially those that you haven't talked to in years, and break a relationship that it's personal, but now it's business, and be willing to do that.
Yeah. Well, it keeps coming back to having conviction to what you're pushing,
Absolutely,
to what you're providing.
absolutely.
And I think that'll take you a very long way. And if you bought into your own products and services, I think, and it comes off as genuine, whoever you're talking to, whether it's at a cold network with people that are new to the city, you might eventually, through conversation, identify a need for your services. And you're like, well, look, we just became friends. I can provide these services for you.
Absolutely.
That's
100%.
awesome.
100%.
Is that where your sense of fulfillment from this position comes from? Is providing or filling a potential, a need for your clients?
Great question. Right now, so it was that in my second year, right? Because when I had a 60-year-old come to my office, and the wife teared up, right? So the story here is I had two couples. I'm sorry, upper 50s, not 60s, and middle class, 3 kids, and everything financially, all the income was to the kids, college, just raising him. And in like many, many marriages, you have kids, husband, the mom and dad is still there, the role of a mom and dad, but the husband and wife kind of distance apart, and the marriage is distance apart. They never took a vacation, just very, very tough life. And I remember the husband leaving early in the meeting, and the mom started tearing up a little bit. And she's telling me, look, can you please help us? We're not doing well with retirement. We haven't taken a vacation in years. And I think she was supporting the husband. I forgot what it was, but it was a couple years ago. But they're just struggling financially and doing everything for the kids. The marriage is torn apart. There's no love, right? And it happens to a lot of marriages. And the reason I share the story is because when we left with the game plan of what we have to do, I think they would retire somewhere in the 70s, right? Which is a little later than the norm. But the fact that they could see the end of the tunnel, right, is just such a huge gratification for them that I remember when she left with tears, it wasn't a tear of worries and fear of stress, but it was actually like, okay, we could actually do this. There's a timeline end. And even at the early 70s, you still got time to retire. So I think after that point, it was really about client driven.
You realize what you could do, what you could offer.
Absolutely. 100%.
It became less transactional.
100%. That
That's
was a
awesome.
big win for me.
That's awesome.
Yeah, that was a big win for me.
How many people? You said so. How many? Or I guess a better question is, these days, and it's very subjective, depends on your cost of living and whatnot. But how much money should someone have to retire?
So the rule of thumb is, generally speaking, this 4% rule. So there's a lot of groups that know about this 4% rule. And for those of you who have never heard it, it means whatever you have saved up, $1 million, whatever, you take 4% of that, and that's what you can retire on, right? 4% rule, unfortunately,
4% per.
of your total saved up nest egg.
Okay.
So 401ks, IRAs, insurance, whatever it is you got saved
And
up
are you drawing? What do you mean? You're drawing 4% every month?
every year.
Only 4%?
Only 4%. So if it's $1,000,000, that's $40,000. So you could live on $40,000.
Oh,
Yeah,
okay,
yeah.
okay.
But unfortunately, the 4% doesn't work anymore. So it is a little less, maybe 3. Some people even argue 2.5.
Why is that?
Yeah, so the 4% rule came, I forgot what year with, but it was decades ago. And back then, things were different, right? The interest rates were much higher than it is today. And the not just the national economic situation, but international economic situation was much more powerful and stronger than it is, especially with COVID. It's just completely different, belly down. So when you look at the 4% rule with the current situation we were in the world and the interest rates and things were booming, which means investments were doing better, you can't really compare that with the interest rates that are obviously significantly different, just less performance of your investments. You can't milk that much out of it then, right? Because it's not performing as well. So when you look at a different scenario in terms of performance, how are you willing to take out 4% a year without running out when the performance of the whole $1,000,000 isn't quite there that it used to be? So 4% rule doesn't really work out anymore, right? It's maybe 3, 2.5. Some people argue. So yeah.
Wow.
Yeah, it's
That's
scary.
not a lot.
It's not. But yeah, it's not.
And this is with the expectation that people's like mortgages are paid off and everything's like paid off.
Right. Yeah, it is. It is scary. And I think one thing that drives me to educate younger people is 2 things. Number one is Social Security. Many people today at 60 live on that. Social Security is
Okay.
a lot of people live only on that. They have no savings, and it's unstable, right? Especially millennials like us, in their 20s and 30s and even 40s and 50s, are uncertain about Social Security. It might not be there for them. As a matter of fact, I had a 70-year-old, 72 or 74-year-old client that had a couple $100,000 in savings. I said, "What are you doing with this?" "With just cash." And she goes, "I need it just in case my Social Security goes away." So everyone's thinking about the uncertainty of Social Security, which means if that's not there, well, then we only have 2 things to live on: either pension, which most people don't have in their careers, or their personal savings. And when it comes to personal savings, if you could only draw out 2.5 to 3%, as you said, is not a lot, which it's not, then how do you sustain a livable retirement? Primarily, it's you live on a lower lifestyle, right? When you're 65, you live less than what you wanted to, or you work a little longer. But that could be with proper planning, that could be avoided, right?
Yeah.
Especially if you're younger. So I think one of the drivers that I have with younger people is educating them on, hey, this is how a proper plan should look like, so you could actually live the lifestyle you want at the time you want and not prolong it to work a little longer. And you got to understand, and last comment I want to make on that is a 401k and an IRA, which is so commonly used for retirement, is only been about 30 some years, maybe if I'm correct, 38 or 39 years. So it's under 40 years old. So it's not that older than you and I. So it's a fairly new product that's provided in our nation. So the amount of information and knowledge that the American citizens have of this thing is not much because it's fairly new still, right? So I think that was my in. Like, okay, there's a new product out there, 401k. Not many people know how to use it, and we got to educate the younger generation of how they could probably be better prepared than the 60-year-olds today.
Yeah.
So,
Yeah.
yeah.
And the financial vehicle that you and I are using, life insurance, and there's different tiers of life insurance, different types, but which ones would you recommend to which demographic?
Oh man, there's so many different kinds, and so there's fixed and variable to make it simple. Can you elaborate that one more time?
Well, which demographic would use it more as an investment, and which demographic would use it in case of a death?
Great question. So there's so many examples of it, but I'll highlight some of them. So when it comes to for the average listener, the average American, right? There's a certain type of life insurance that are mainly used for higher income earners, right? And that's for the tax purpose. In other words, in a life insurance policy, the benefit of it is tax free, right? That's how it's usually pitched. It's tax free when I take it out. It's taxed when I put it in, though, like a Roth IRA. And when you make a certain amount of income, not only is the Roth IRA you can't directly contribute to it, although there are some backdoor methods, but there's limitations on how much you can contribute to a Roth IRA. So that particular life insurance that I'm talking about for richer people, they could put more into that and save more outside of the Roth IRA as well. but there, I would say everyone in some level should have some life insurance policy as part of an investment, especially the way I did it and you did it, for retirement purposes and how you spend the money. So to dumb it down without having to draw on the board or anything, it's you got to know how to save and spend, right? So when it comes to the 6-7 years I've been in the business, I spent a lot of thousands of dollars in certifications and seminars. I learned a lot. The two things I've learned is this: you need to learn how to save your money, meaning where do I save, like 401k, and then how do I spend that money? How am I going to spend that money when I retire? And most people don't have a spending part down. And then I appreciate you showing me someone's Instagram. I forgot what was that again? Save and spend, or you showed me an Instagram post, I think, with someone saying, most people know how to save, but very few people know how to spend, or something like that. But that's what you got to learn. How do you save and how do you spend the money? And that's where life insurance comes into play. How to spend that money in the long run.
Yeah, did you learn that from the RICP, sir?
That was part. Yeah, that was part of it. RICP was big on that.
Okay. And so what did you tell me about what life insurance can do for me?
Yeah, so when it comes to the spending side of it, so let's say like most younger generations, we have a 401k, we have an IRA, primarily mostly in the market, right?
Yeah.
Goes up and down with the market, and you should have most of your money in there because in the long run, it'll perform well.
Right.
But when it comes to spending it now, when you're in retirement, you have all this money, right? You have all this money. When the market goes up, that's great in any situation. But when the market goes down, when you're working and before retirement, we don't like that, but that's okay because we still have time before we retire. But when you're retired already and you don't have a job to start saving into the IRAs or 401ks and the market goes down, not only does your balance go down, but you also take income from that because that's what you had. You got to pull money to survive.
Yeah.
So it's a double hit. You're depleting your assets so much faster now, right? Because you take that income out. By using a life insurance policy, as we talked about, right? If you were able to pull out of a fixed asset, something that's safe, like a life insurance policy, they generally call this a buffer asset for the viewers that they want to do their research on Google, buffer asset. Wade Pfau is the researcher on this. PFAU is the last name, Wade Pfau. You'll realize that when you take out your income in retirement from a life insurance policy on down years of the market and leave the investment portfolio like an IRA alone and don't take the income from that, the rebound of the market is significant because the money left in the IRA will then rebound with it, and that's huge. That's significant, right? So, and I always use the 2008 example. If 2008 hit again, and I was taking $60,000 a year for retirement, I'm already retired, and then market hit, I took out of a life insurance policy for income that year, and I took $60,000. I leave the $60,000 in the IRA, and then the market rebounds in 2010 and so forth. The next subsequent 6 years, it's 3 times the amount. So that 60,000 would have been 180,000 in 6 years.
Yeah.
Significant difference. And so that's the value of spending.
Can you pull that much out of the buffer asset?
Yeah, so you want to contribute to it when you're younger to have a certain amount of income readily available, but you can. Absolutely.
So what's the ripe age to start for this life insurance?
You know what, depends on income and age. I would say 40 to 45 and under is good. Even 50 if you're
so is there a point where it's too late?
No, there's no point where it's too late. There's no point. We have 60, 70-year-olds doing similar strategies at this point. Now, they may have a little bit more cash sitting around and a little more affluency, but for the general American, average American, let's say 150,000 or 200,000 household income to maybe 60,000 household income, I would say 45 is a good number. Under 50 is a good number. Under 50.
Okay. What, in your experience with your clients, what has been the reason for the clients that are more well off? Like, what have they done to put themselves in that position? Is it just one source of income? Like, what is it? Is it a job?
Well, so depends on your definition of well off. What would be well off for you?
Yeah. Secure and comfortable, and I don't know if I can put a number on it because
Okay.
I don't know.
So
when someone comes off as comfortable.
Okay, so comfortable could be many things. I think so. Let's start there. Comfortable would be the comfortable starting point. This is a biased view. I'm not sure, but I would say household income of 150 to 200 is kind of that start point of comfortable.
Nice.
Where you don't really have to worry about bills as much, right? So I think 150, 200 would be comfortable. Anything over that is then starting to get into the okay, um to be honest, that's the real middle class, in my opinion, right? And I hope no one hates me on this, but they say middle class is 60 grand household income, or that's the median. I would disagree to that. I think when you make 100,000 household income, just even 100,000, even 150,000, I'd say, or 140,000, I think it's very difficult in a middle class standpoint, because you don't have to worry about groceries or anything, but at some point you do. You can't go to Whole Foods and buy a bunch of groceries for 2 kids like we have and not worry about the next week.
But that's the thing. It's like I think middle class is what the average American is going through, and the average American is probably making that household income, which is a shame. That's like something systemic has to change.
That's true. You're right, and that is the real definition of average, right? And that has to change. I mean, it's terrible. I forgot the statistic. I think 80% or 76% of Americans are living paycheck to paycheck, and we're known to be one of the richest and affluent countries in the world, and that's what it is, and that's such a shame. And what really got me was when I first made that 100,000, I thought, wow, what a small number this actually is, like after taxes and everything, right?
After you hit that point, did your cost of living go up? Like, did your lifestyle go up? Like, what and it like, oh, I feel free now, or like, what did anything change in your personal life after you crossed that line?
Yeah, great question. I think I would say let's say 100 to 150. The lifestyle change that we had there was the biggest one, and the one, probably the only one, is dinners. Meaning, like, my wife and I could go out to dinner maybe once or maybe twice a week, and dinners are expensive. Like, you get appetizers, and sometimes we didn't even order appetizers. It's like $60, and that's expensive, right, for dinner. I mean, for the normal people, and you do that once or twice a week, that adds up, right? But I think like around 150,000, I think that is okay now. Like, that part of life changed. Like, we're okay with that. That's my opinion. And then I think net wise, so let's say 10 to a little more than 10, but let's say 10 to 12 or 14,000 a month after taxes that you're getting in income, whatever that is gross. So you're making 10 to 14,000 after taxes a month. Then that life changes. Like, the dinners are okay, obviously, but now groceries are okay. So you go to Whole Foods and you spend $200,000, $300,000, even $400,000. That's okay. Like, okay, so the next week we don't have to worry about spending another $300,000, right? I think that part gets okay. Now, you wouldn't spend $300,000-$400,000 every week. We're not there yet. The kids are still young, but the point is that would be okay, right? And let's say anything over that, I'm assuming it's like furniture. Like, we just got a bonfire thing. It was like 400, maybe it was, no, I think it was like $700 or $800 all together with 4 chairs, cushions, everything. So that on a lower cost of bonfires, but buying an $800 or $1,000 thing for the house every 3 to 4 months is okay.
Oh.
It's okay now. So I think those were the biggest differences. And obviously, I'm assuming I've never made 500,000. I wish to. I think that's where most people say that I've heard is the fun income.
That's the fun income?
That's what
Half
I heard.
$1,000,000?
Yeah, I heard that from someone.
Holy
like,
shit. I don't know anyone that makes that much money.
Yeah. I think that's what I heard, though. I think 500,000 is where the fun income happens.
Okay.
And then you have the super wealthy, like, they're making like 10 million, 20 million. And they're not even super. I say they're wealthy, and the super wealthy are making 100 million plus.
And they have the time to play with that money?
I don't know that many people who, I don't even know if I know anyone that makes 10 million or more, double 8 figures a year or more.
I guess what I'm getting at is, like, everyone has their ideal, like, point, right? And, like, I feel like, although it might seem I'm going paycheck to paycheck, I'm like, life is good. I don't know, for me, and like that might be short sighted, and you're probably helping me with the long game here now, but yeah, it's all ideal. Everyone has their own ideal point.
You know what? And I think that's better. And I'll be honest, I've had moments where I was super materialistic, and with Instagram and Facebook, like, we want to compare, and as you climb this income ladder with people, you compare yourself with someone who's making 500 now. You're like, I gotta make 500, and I think that really hurt me mentally 1 or 2 years back. And what I started to do is slow down. Sometimes take a step back and just appreciate. Look, I got 2 kids. I got a wife. I got a home, and we're healthy, and that helped me so much. But that's so difficult to do, with and like just so
Yeah.
many people like flexing. It's very very tough.
I guess, and you said you and your wife had problems initially, right? So like with what if these days, what if she became like a nurse anesthetist or an NP and started making 200,000 and she was the breadwinner? I would feel like if both of you are making six figures, it's
Yeah.
like we're all winning, you
Yeah,
know?
yeah. Which well, first of all, I want her to make I hope she makes more than me, right? So I actually want her to do that.
Right, yeah.
Um, so I mean I try to tell her go to school. That's up to her, right? She whether she wants to or not. Um, but right now she knows the opportunity is where we are, right? We're young. There's a bigger opportunity to make, the threes, the fours, the fives. Some people make seven figures here, right? So we know there's people that done it before, a lot of people, so we could do it here. And she's investing in me, hopefully, to make that happen.
Yeah.
So I appreciate the support. Like, part of the things that I'm trying to appreciate in life than just run, and compete.
Got to do it
compete.
together, yeah.
Got to do it together. So, but in your definition, yeah, I actually want her to. We don't have daughters yet, but if I have a third baby and it's a girl, I want her to. And I hope no one takes this as a bad view, but I want my daughter to see her mom, which is my wife, to have her own career, because marriage for me was very tough, like it is for many people, and especially in the beginning. And we almost went through a separation early in our career. Oh, I hope my wife doesn't hate me for this. It just came out, but we almost went through a separation.
Sure.
And I could see why a lot of marriages go through separations. And if my daughter was relying, like many women are, with to the man for financial support, I can't imagine my daughter like not having a job. Right,
Yeah,
I would want her to
yeah.
have her own career. So
Right,
for that
right.
reason, I want my wife to have her own career for my future. Hopefully, the third's a daughter. But I do try to encourage her to, hey, like, we got to get you a career. Like, I want you to, and she wants to. Like, she wants to
Good.
find something she wants to do. So we're just super busy with two kids and
Of
hopefully a
course.
third. So
Yeah.
yeah.
What do you think is the next level for you, Eric, in this journey? After it's been 6 years. Like, where else is there to go?
Yeah. Well, in what perspective?
In the advisor role, is it just more clients, or like is there what else is there?
Yeah. So first of all, I want to create a brand. I've realized any big company has a brand. Coca-Cola, McDonald's, any big brand has a brand and big company, right? So if we think of soft drinks, coffee, Starbucks, right? And when it comes to financial services or financial planning, I don't think there really is a brand. First of all, people don't think about it.
Hmm.
That's probably an issue, right? So if I said, "What do you think about financial planning?" What do you think of? People are probably, I'm assuming, gonna. I mean, if I asked you, what company do you think of financial planning?
It
What
depends on what industry, right? So like if I think of uh marketing, maybe Gary Vee. If I think of real estate, maybe Grant Cardone. So it's like is that what you're trying to get at? Is build a name?
build a name. So when someone says retirement, right, or ever think about that, they might not think. They might just think my 401k guy at work, or I have something at Fidelity, right? But they're scattered around. There's no firm.
Yeah. Well,
Like,
it's so easy to hop on a phone, and they're nice,
yeah.
but I guess it's not. It's a different level of like intimacy when like you can really like be vulnerable with your financial advisor.
Right, I agree. Yeah. So I want to be I want to at some point be that in the long run, right? Like Grant Cardone, for example, is so many titles. Real estate guy. He's got so many shows going on, right? And it could be the motivational speaker, but he has so many titles. But when you think of real estate, at least for me, I think of him, like you said, Gary Vee, marketing. I don't. I mean, if I'm that big ever, that'd be amazing. But even if a small portion of that, and someone says retirement, someone's 60 or
So you want people to eventually come to you instead of you seeking other clients out.
absolutely. And many people don't know where to go. If you talk to a 60-year-old and that doesn't have an advisor, which many people don't, where do I even start? They don't know. They don't know what company to call. They're kind of like, where do I even start? Who do I call? Like, what company do I call? There's no starting point, and I think that's a huge gap in this industry when everyone's gonna retire at some point. So, I want to build that. Hence the reason I started the LinkedIn content.
Yeah. So is LinkedIn the best place for that? Are people looking for advisors on LinkedIn?
You know what? I'm not sure.
I
I'm not.
don't know. I guess you're just networking with other professionals,
Yeah.
not necessarily seeking an advisor. but maybe they might know someone that is seeking an advisor.
Yeah, yeah. And what I'm hoping to find the audience is people like me, right? I was always interested in investments. I
Mm.
just never knew much about it. I bought books, but I never read them. I spend money. I never spend money, but just books. And there's people like me that were younger or in their 50s or 60s that want to learn more. They just didn't know where to start. Maybe they bought books like I did and they never read it, right? They never finished it. Or maybe they bought an online course about education or Dave Ramsey stuff and they never got to finish it. And they're like, where do I start? That kind of thing. I want to. That's what I'm trying to target to, right? Through my content is, hey, do you want to learn? And I'm no fee, pro bono. And some of those guys may convert. Like, hey, I learned a lot from you. I've been seeing your content. You taught me a lot in our meeting for free. I appreciate it. I want to be a client of yours. I'm ready to pull the trigger. So that's the
Interesting.
people I'm looking for.
Have you heard of Mark Kohler?
I have not. No.
Oh, okay. Yeah, similar. So it's just a lot of these people are just putting out free content so much to the point where whoever's listening wants to give back eventually. Give back in the way of let me learn more under you, or let me pay you for something, and eventually you might have your own product or service, and they might just be a client. I don't know. So, yeah, that's the we learned a lot from Gary Vee for that. Just like keep putting out good value out there, and the money will come.
And I know you've been doing a lot of studies. I'm fairly new at it, but yeah. I'm slowly studying that
Yeah.
realm of marketing and so forth.
Yeah.
It's interesting. There's a lot.
Right.
There's a lot.
Right.
Yeah.
That's all I had actually. Is there anything you wanted to add on your end?
Yeah. So for podcast purposes, I do want to tag along a couple things for those interested in pursuing the career in financial
Sure.
services. Number one, ask for the track record. So if whoever is going to train you, they're trained to do great recruiting, great interviews. That's why what we do, we recruit. We're trained by the company to give you a good interview process and experience. So the dream may be sold, but the best way to do it is look at their track record. In other words, ask them, how are your guys doing? And that's huge, because if they're doing good, then that means they have some sort of skill set in a leadership role, to a higher percentage at least, to take your skill set at ground wherever it is, because you just started the career, to where you want to be.
Mm-hmm.
They have a much higher percent success rate. And the leadership role is so critical to your success. So critical. So I guess the big thing I would say is, if you're interviewing with anyone, ask for their track record. How are they doing? Right? And be curious. And one of the things you might be able to ask is, what ranking are you out of how many of the people in your position in the company? What ranking are you? And how many years you've been there? Right? So if they're 2-3 years in the game, but they're like in the top 100 for top 50 or whatever out of how many, they're doing good. They might not be number one because it just started, but the fact that they have that track record, they're doing well.
How competitive is it between recruiters?
It's
Is it cutthroat?
what in terms of, hey, I want to recruit him, not you,
Yeah.
that kind of thing. You know what? No, not it is, but there's so much people in the Chicagoland area that it's not that cutthroat. It's not that cutthroat. There's enough people to recruit to.
Okay.
Yeah, there's enough
Okay.
people. It is pretty cutthroat, but it's not. We try to fight over someone.
Yeah.
Yeah.
Was there anything else you wanted to add to
Um,
those listening?
that and the other thing is, if you want to go into the industry and someone's asking you for what they call a Project 200, which is give me your 200 warm names. I personally didn't join.
Whoa, you give up your names?
Yeah, when you start, because they're like, hey, before you start, do you have 200 names to even start with?
Oh.
So, but they got to submit it to them. And my thing about that was, I didn't want to. Like, why would I give you my warm names? Like, if I leave, you're just gonna call them and get the business then. And that looked really, really salty, or whatever you call it. And I didn't join the first company, and I don't want to name the company. Great company, by the way. And so I joined the company I'm with, and I'm realizing that that's not for them to call. Okay, so most of the time, that's not for them to call. It's for them to have you use and call and help you out. And also, they give you free marketing where they mail or email them saying,
Did they not specify that? Does the recruiter not specify? Like, hey, we're not going to do anything with these names. That's for just to show me that you have some buy-in into this.
I don't know what other recruiters may say, but primarily it's for you.
Yeah.
And they do give you free marketing. Like, they mail out stuff
Sure.
saying, hey, it's me, I just started. So don't let that be a hindrance. If it's really, because this opportunity is great, and yes, a lot of people fail. Most of them do, right? But if you're that very selective few that make it, it's worth it. It's worth the trouble. It's worth the stress. Because where else can you make $100,000, $200,000, $300,000 within less than 10 years? You can't. or maybe you can, but it's rare to find that kind of industry, right?
Yeah.
So if it's for you, you are driven and you're okay with rejection, and the one thing that's holding you back is that project 200. That shouldn't be. That's
Cool.
for you.
Yeah, I didn't know
So
about that.
yeah.
Um, s- with the first question, speaking of track record, what questions should potential clients be asking of an advisor?
Oh, so being not working for the industry, but being a client.
Yeah.
You know what? The biggest thing is relationship, to be honest, because there are some. I hate to say it, but in the industry, there's people that are maybe not give you the right advice, and it's all for the commission or money. Um, the best way you got to find out is it's okay to be a little hard. It's okay to say I'll think about it,
Hmm.
right? Especially if you don't really believe in it, and there's not much trust, right? It's okay because there's so many angles that an advisor could do that could benefit you or disbenefit you, right? So so there isn't a firm question to what's good. The best answer I have to that is
How do you
uh,
feel about it?
how
And
do you feel about it? Like
yeah.
how is that relationship? How is it? And I'll tell you why. Because even if that advisor did something for you in your plan, that it's most likely going to be better off than where you were before. There may be a better optimal plan, but they just put you in a smaller plan. But that other plan is still better than where you were most of the time. So that's good, right? That's always a good. But the best way to do it is how was the trust? What did he feel genuine? Did the plan make sense to you? Did the strategy make sense to you?
Mm.
Right? You have to have your gut feeling because so many angles to how to help people that it's gonna take you I don't even know everything, but 6 years, thousands of dollars invested for you to even know if it's the right move. You really want to spend that much time and money? Probably not. But most just know that most of the time when an advisor does it, they're gonna do it out of goodwill, and even if their lack of education, they're putting you in a position that's better than when you were before, most likely. So yeah.
Okay. Okay. Well, Eric, thanks for your time.
Thank you. Appreciate it.
It's really cool to see. I can tell that you enjoy what you do. Do you feel like at this moment you have an ideal work-life balance? Do you feel like you're home enough with the family and you're happy? Can you say that?
I'm you know what? I'll be
Is it
honest.
is it happy but never satisfied? Like,
No. It's you know what? It's I'm at this position where I, I I should be grateful more for, especially at my age, right? But I think what I'm trying to work on, number one, two things. Number one is happiness. Is stop stop being so hard on yourself and try to make this happen. Like helping people, helping a certain amount of clients, and this monetary value thing of 500,000, right? Like stop going for that. Be satisfied with what you got for now and just take a pause. That's very very difficult for me to do.
yeah,
Um,
but
uh,
you're aware of it.
I'm definitely aware of it, and what's helped is the gratitude thing, right? So being
Yeah.
gratitude, dude. Two kids, healthy wife, beautiful
Right,
wife,
right, right.
whatever. That helps, and but
I think it's very hard to have a house in the burbs with two kids
yeah,
at our age.
yeah. And I agree with that, right? And look, we're by all means we should be very happy, right? I mean, dude, we're making great money. My cars are paid. The only debt we have is the house, and there's only 100 and some thousand left on it, right? So
Wow.
we're really really doing well, and but I think one of the things is I'm just so hard on myself because I want to make the next move to whether it's hiring more people and teaching them or having more clients and helping them, but it's gonna have a different kind of angle. Like I got to do something different than I'm doing now to get there, and to
And that's through social media.
social media, yeah, but like for social media, I don't know all the answers. So just the trial and error adds to my daily work life.
Yeah.
So my lack of I really suck, and I'll be honest with you. I suck at time management, man. I can't. I try to spend time with my son. Like today, I tried to spend 45 minutes in the morning with him. I didn't. So and seeing him grown up, he's almost 3 now. I'm realizing that daddy portion of him has to be there now at 3, and as he grows. So, and that's super important to me. But so I'm trying to do a good time management where I'm doing the work. And it's not your daily work, but also future work of okay, so how am I gonna get to my goal in 6 months? I gotta do something different. What's different? Well, let's try it out. So I try so many different things, and once one clicks, then that works. But that's so much trial and error for 6 months to a year, and that's just so tough with time and then the wife. So it's tough where I'm just trying to keep a husband wife balance. Dude, I've been there. I almost went through a divorce with her. Right? I don't want that. Like
Yeah.
and
Yeah.
I see a lot of people making great money. and their relationships are super sour. Like I don't want that, man. Right? So I want to be a good husband. I want to be a good father, and I want to have a good business that are helping clients and recruiting people, but also it's healthy for my family and income. So
I know.
I've been having a lot of difficulty.
Yeah, it's a fine balance between wanting enough to provide and provide freedom and security for the family, but also realizing what they really probably need the most is your time.
Yeah, yeah. And you know what? I'll put some fault to it. It's actually somewhat of an easy solve for now. Is wake up earlier. I haven't. I'm not gonna lie, dude. I used to wake up early. Pandemic got me lazy as shit. I'm not. Dude, I woke up at like 6:45, 7 today.
That's still pretty early.
It is. It is. But the kid wakes up around then, right? So it's easy for me.
Okay.
But it used to be early before he wakes up, before the pandemic. And
Yeah.
dude, I used to exercise at least 2 or 3 times a week. I do it maybe, like
Once a month?
a little more, like maybe twice a month.
Yeah, right?
So it's.
I know.
So I have been. It's an easy solve for it. I just I guess I've been a little bit lazy about it.
Hey,
And
as long as
yeah.
you're aware and you're working on it,
yeah,
small wins.
small wins.
I posted something last night about, we brush our teeth for 2 minutes twice a day. We don't do it for an hour on a Sunday, right? So you can't just lump sum everything. You put your energy on one day and expect to get all these gains, right? It's like it's small wins over time that add up to the collective win.
I like that. Yeah. Yeah.
So just keep that in mind. I mean, even if it's like through social media or whatever you're doing, you put in, 10 minutes here, 20 minutes there, and it'll add up eventually. It's because you got to learn through it too. So yeah, I mean, this is a pretty good episode.
I appreciate it. Thank you.
Yeah.
Thanks for having me, man.
All right, guys. Thanks for tuning in. I will see you guys in the next episode. That's
Thank
it.
you. Thank you. That was awesome, man.